All right, guys, bang, bang. I thought we'd do a quick conversation with Will. Let's start with Bitcoin transactions absolutely exploding over the last couple of weeks. What's going on?
Yeah, for sure. We've seen Bitcoin's transaction count reach an all-time high. So the Bitcoin network is now settling more transactions than ever before. The question is, what's driving this? Frankly, it's not people viewing Bitcoin as a safe haven asset, or that may be playing a partial role in it. But it's really been the rise of Ordinals. We've seen Ordinals inscriptions absolutely explode over the last few weeks. Ordinals have now generated over $7.6 million in transaction fees for the Bitcoin network.
What exactly is an ordinal?
An ordinal is an on-chain inscription that essentially is based off of a numeric system that applies a number to every single Satoshi. So Satoshi is, if you break down Bitcoin, it's the most divisible unit of a Bitcoin. So there's 100 million Satoshis in every Bitcoin. What ordinals do is essentially attach a numbering system to every single Satoshi, and you can inscribe things like text, images, etc. And so, of course, ordinals primarily are just a speculative vehicle for people to gamble on, very similar to NFTs on Ethereum. But they've absolutely exploded over the last few weeks as we've seen new projects come out, as well as exchanges actually supporting the transactional activity around ordinals.
Why are people putting wizards everywhere? That's all I see on Twitter. Is that like one of the memes that's kind of getting inscribed into these Satoshis?
Yeah, that's one of the more popular ordinals projects that's taken off. That was led by Udi and Eric Wall. I think they're trolling the kind of Bitcoin maximalist community a little bit. But yeah, that's been one of the projects that's gotten some steam.
Got it. Now I understand why there's so much debate over those two things. So transactions are exploding higher. We also have seen hash rate just hit a new all-time high. I think that it's the largest 5-day increase in hash rate. What's driving that?
Yeah, so when you think about ordinals, again, it's driving a lot of transactional activity on chain, as we just mentioned. When you think about what that means for miners and transaction fees, as you have more demand to use the network, there's an increased amount of fees that individuals have to give to miners to incentivize them to include their transaction in a block. So we've seen that obviously reflected in transaction count, but we've also seen the mempool the most full that it's been since the FTX collapse, which is essentially the backlog of transactions. And we've also seen that translated to transaction fees themselves. So Bitcoin network transaction fees are now the highest that they've been since July of 2021. And so for miners, it's a very positive thing because they have more revenue that they're bringing in through transaction fees. I think it's also worth mentioning that if ordinals aren't just a flash in the pan, and we see this trend continue, given that we're in a bear market and transactional activity is this high, if it's to sustain this current trend into kind of the next multi-year bull run for BTC, you could see transaction fees being extremely high. And pair that with some of the work that people like Jack Mallers and Strike are doing, or David Marcus and Lightspark are doing around kind of building out Lightning applications and building out very sleek user interfaces to interact with Lightning. I think it actually sets up a really interesting setup for the Lightning network and individuals to move from using Bitcoin's base chain to actually adopting Lightning as that layer 2 to be able to transact without very large fees on the base chain.
When you see kind of all of those fees flowing, do you have any viewpoint as to will they grow to double or triple? Is it some limiting factor? Like, how should we think about fee growth? And is that positive for the network? Or actually, if there's too many transactions and the fees get too high, is that a negative thing?
Yeah, it's a great question. So it kind of depends how you want to frame it. It's a positive thing for miners because they're bringing in more revenue. But it's a negative thing for kind of the average retail user of the Bitcoin base chain. But again, if we have more applications built around Lightning that are easy to use for the individual user, that should move those users to the layer 2 and allows Bitcoin to scale. So it kind of depends the perspective of who you're kind of asking the question from.
Got it. Let's talk about the 4-year halving cycle. You and the Reflexivity Research team did this huge deep dive on the 4-year halving cycles. What did you find out?
Yeah, for sure. I think there's a couple points that we can kind of break down. The first one, we kind of segmented the report out into a few different subtopics. We looked at kind of macroeconomic factors, some of the Bitcoin native factors, and then what I called kind of behavioral dynamics, and then kind of touched on miners briefly as well. First, when we think about what is the 4-year cycle, for anyone that's been in the digital asset space for a prolonged period of time, is very familiar with this concept of the 4-year cycle. But for anyone who isn't, oftentimes you'll hear crypto market commentators or market participants ask you, how many cycles have you been around for? And this is referring to what's at least historically taken place as this kind of 4-year cycle that revolves around Bitcoin's supply halving. So the supply halving is when Bitcoin supply issuance gets cut in half. The first one was in 2012, then 2016, May of 2020, and then the upcoming supply halving will be sometime in late Q1, early Q2 of 2024. And so historically, what this has indicated is that when you have kind of this imbalance of supply and demand, you have a decline in the amount of new supply coming onto the market. Even if demand stays the same, you should theoretically have an upward drift in price. And so we included a chart in the report basically showing the 90-day change in issuance relative to the trailing trend of issuance to show kind of that supply, quote unquote, supply shock. But when you compare that to the overall circulating supply, you see that halving effect actually diminishes over time. So a way to think of this, I don't take baths anymore. I don't think I've taken a bath since I was 5 years old. If you're sitting in a bath and you press your hand down on the bath water, create a massive ripple throughout the entire bath. If you were to apply that same pressure in a lake, it's not really the ripple's not gonna go far. And if you were to apply that same force in the ocean, it's not gonna do anything. So, my point in how to bring that into applying that to the supply halvings is that you're applying the same quote unquote supply shock or impulse, but the overall pool of circulating supply is larger over time, and therefore there's a diminishing effect of the supply halving on the overall market. And so that in itself, in terms of driving the cyclicality of Bitcoin, has had a diminishing effect. When we look at some of the kind of behavioral dynamics, there's a couple things that we looked at. The primary piece of information that we looked at was this idea of gauging profitability, which we used to gauge through on-chain metrics, which are essentially looking at Bitcoin's economics. And so we can look at things like how much unrealized or also realized profit or loss the market is in. What I mean by that is we can look at the last time that all coins moved on chain, look at the current marginal trading price that Bitcoin's trading at, and compare the two. So we can see, is the market in a state of a massive amount of unrealized profit? If that's the case, there's a large likelihood that those individuals are going to look to realize some of that profit. Conversely, when we're in the bear market, there's a large amount of realized losses, especially if we adjust it for market cap to get a kind of relative view to historical bear markets. We can see that, okay, there's a large amount of capitulation. Capitulation is a kind of behavior that historically marks the bottom of cycles in all markets, including Bitcoin. So that's one of the most important pieces of information. We included a couple different data points, including SOPR, net unrealized profit loss, realized profit loss, all in the report. And then we also talked about the concept of miners. So we briefly touched on them when we mentioned transactional activity. Miners have a diminishing effect on the overall market over time. Part of that is because of the supply issuance. So miner revenue as a percentage of overall circulating supply continues to decline. And also when we look at miner balances as a percentage of overall circulating supply, that continues to decline as well. So therefore, they have a diminishing effect on the overall implications for Bitcoin's price action. And then the last piece that we looked at, again, was the macroeconomic factors. Try to keep the piece relatively Bitcoin-centric, but I picked kind of two data points that were worth looking at. One is ISM, and so what we're looking at here is essentially a survey of all manufacturing economic pieces of information. Bitcoin has historically had a very high correlation to ISM. We have these very brief periods of kind of decorrelation. We saw this, I believe, in 2012, late 2018, before the 2019 run-up. And recently, we've kind of seen this decoupling of continued decline in ISM while Bitcoin's continued to tick up over the last few months. What does that indicate? The reason for those kind of decoupling or periods of divergences is because whenever you have a sharp economic decline, the Fed steps in with liquidity to kind of counteract that economic decline. And so I think it's kind of a reflection of the sentiment of market participants in terms of thinking that we've kind of reached max hawkishness, for lack of a better term, with monetary policy. And people, being forward-looking in the market are viewing Bitcoin as kind of a gauge for that kind of pivot in monetary policy over the next 8-12 months. And then the other macroeconomic metric that we included was the DXY, which is the dollar index. So it looks at the dollar measured against other major fiat currencies. Specifically in the piece, we looked at the year-over-year change. So what's the measure of the Dixie today relative to what it was a year ago today? And we can see that Bitcoin is historically traded, again, with a very high correlation to this. And as you'll see in the report, the year-over-year change in the DXY continues to decline, which, if that trend continues, should be a positive thing for BTC.
What is your expectation with what will happen during the next Bitcoin halving?
Yeah, it's a very interesting question. I think it depends what kind of time frame you're talking about. I think locally you need to kind of watch how people are positioned heading into the halving. I think this is something that we mentioned on a previous episode that we've done on the halving, but I think it's important in markets to understand it's not always about the outright quote unquote bullishness or bearishness of an event. It's how bullish or how bearish or how positive or how negative is this event relative to the market's expectations. So you could have a very positive event, but if it's not as positive as the market's expecting it to be, you could actually see a negative reaction from the market because they're over positioned too positively. So I think that's something that I would watch heading into the halving. This is something that took place at the beginning of 2020. We saw in the derivatives data that we saw things like funding rates absolutely jacked, like 200% APR heading into the halving. So essentially, everyone was getting leverage long, expecting or kind of front running the positive price appreciation after following the halving, and then they got wiped out after the COVID crash. That's something that I would watch for kind of locally. But I think from a narrative perspective alone, it's very interesting. You kind of got a stark contrast, and you very eloquently described this on CNBC last night. Of you've got people debating, what this group of individuals is going to do with monetary policy, and there's a large degree of Jerome Powell basically trying to go on a campaign to reclaim his credibility after calling inflation transitory, at the end of 2020 into 2021, and now it appears that he's kind of overshooting to the downside with tightening monetary policy. At the same time, we've got a programmatic monetary policy with Bitcoin. We know exactly what the supply issuance of BTC is going to be whenever the halving takes place, at the end of Q1, early Q2 of next year. So I think from a narrative kind of perspective alone, it's a really interesting kind of contrast. If you've got all these banks blowing up, meanwhile, Bitcoin, although we have price volatility, Bitcoin really is certainty and stability in an uncertain world because of the fact that it's completely driven by code and not human decisions, which are bound to make mistakes with monetary policy.
The last thing I want to talk about is I see all over the internet frogs. I keep seeing them. What the hell is Pepe? Why are people talking about this? My general take is like all this stuff ends up being super hyped up and then it's absolute nonsense. Does it have anything to do with Bitcoin? Is it just a meme coin? What is going on?
Yeah, Pepe is an interesting one. It's a meme that's been very ingrained into the Bitcoin and crypto community for years. I'd be lying if I said that I had a bag of Bitcoin. I guess Pomp and I, we should have hedged our our regional bank stocks with our Pepe coin, and that's I guess the new safe haven asset for global macroeconomic investors. But yeah, it's basically just one of those meme tokens, very similar to Doge.
So it's just a meme token. It has nothing to do with like the original NFTs that were on Bitcoin or any of that type of stuff. It's literally just a meme token that's trying to take over the meme that's been around the Bitcoin community for a long time.
Yeah, pretty much. And now I saw this morning that Binance is listing it on their exchange. And so I would say be very careful. Obviously, these are very high risk assets. I'm not advocating anyone to buy it, but I would say definitely don't short this thing either. I think the degeneracy can kind of outlast you. As there's the saying in markets, the market can stay irrational longer than you can remain solvent. So I would say be very careful trying to short this thing.
Jesus Christ! All right, thank you so much for doing this. We'll definitely do it again in the future.
Yeah. Thanks, Pomp.